Fed's widely expected to hold rates steady at the conclusion of their two-day meeting. Joining us now, former Fed Vice Chairman Alan Blinder. He's now an economics and public affairs professor at Princeton University. You expect, I guess, like everyone, that they'll stand pat today, Professor. What's your total number of cuts that you're expecting this year? And do you think the Fed is still restrictive? And does that make sense given some of the policy uncertainty from the Trump administration?
I think the Fed is slightly restrictive. I wouldn't, go hog wild over it that they have a huge amount of cutting to do. What they're looking at mainly is massive policy uncertainty coming from the White House. The Fed doesn't know any more than you and I do about where this tariff war is going to end, how long it will last, how virulent it will be, and therefore, among other things, how stagflationary it will be. That's a word you're not hearing very much, but if you think about the impact of tariffs, they're like supply shocks. They are supply shocks. They're self-inflicted supply shocks. And they're coming our way. We don't know when exactly. We don't know how severe they will be. And the Fed has got to be thinking about that quite a bit, but just thinking about it.
Right. That could be put a damper on growth as well. And Doge theoretically could put a damper on growth.
Yes.
Do you worry about the inflationary side of things with tariffs? Or do you think that the Fed's job wasn't complete with the last bout of inflation? Did they finish that job, or is it going to be new inflation? Because some people don't think tariffs are permanent inflation, like a explosion in the money supply. They don't think it's the same thing.
No, that's fair enough. I mean, that's what Scott Bessent said the other day, and that's fair enough. And unless Trump raises tariffs this year, next year, the year after, and so on, and just does it every year. That's not what you expect. You expect tariffs to run up for a period of time, probably maybe a short period of time, and then level off at some higher level than they are now, pushing up a whole variety of prices, but it's mostly a level effect. That said, if the level effect lasts 1, 2, 3 years, which it very well could, it's going to look a lot like inflation.
Right. Do you think, I was being a little lighthearted about it, but I think Chairman Powell is in a pretty good spot right now as far as Fed. They never feel like they're great and can sit back and relax, but he can almost say, I've handled this uncertainty in the global economy and trying to bring down inflation. I've handled that. Now I'm right where I want to be, and anything that happens from here, I'm just responding to exogenous factors. Do you think he orchestrated a soft landing and, was responsible for what was quarter after quarter of pretty good GDP growth?
Pretty darn close. Now, Jay Powell's a friend of mine. I don't want to take anything away from him. I think he's done a very good job steering the Fed. But a lot of this was done for him, just as a lot of the inflation was done to him, not by the Fed. We had these, as we all remember, we had this terrible series of supply disruptions due to the pandemic, and especially coming back from the pandemic when things couldn't get delivered and there were shortages all over the place. That's what shot the inflation rate up into the stratosphere. Maybe a little bit about the Fed being too loose for too long, a little bit, but mostly it was the supply side. Similarly, on the downside, notice, as I'm sure you have every day on CNBC, this disinflation came without any recession or anything close to a recession or even much of a slowdown in growth. That's the way the central bank usually pulls inflation of an economy. He hasn't had to do that. And fortunately, I mean, there was room for a mistake then. He could have done that. They could have done that. They didn't. And that was a very good series of decisions.
It's too good to be true. You're right. Last time they call them 40-year highs in inflation. When you go back 40 years and see what they had to do to break the back of that, it was a deep recession. Deep recession.
Yeah, that was the Volcker period, and it wasn't easy.